So I'll be walking you guys through how to create a baseline scenario here in scenario analysis. So at Holistipilan, typically we would say before you do any proposed scenario for a client, we would like you to make a baseline scenario to go off of the year that you're modeling for. The reason we do this is because we want it to be as accurate as possible to show the tax implications of what the proposed scenario is going to be. So if we do something like a Roth conversion or a QCD, we want to go ahead and create a baseline for the year that we're modeling for those things to better show the impact and tax impact more specifically that they're going to have. So the way we would do this is we're going to add a scenario. You have three options here, but we're always going to copy. So we're going to copy from a scenario. We're going to copy over tax year 2023. Now, we know that year to year, your taxes are probably going to look pretty similar. This is why we're copying it over. It's going to make a lot less work for you on this end. So we're going to go ahead and bring this over. Depending on your client and their age, you might get this override notice. So this is telling you two things for John and Sally. For one, it's saying these numbers are combined for your client. So we have $50,000 for John and Sally in taxable IRA distributions and 57 grand for John and Sally together in gross Social Security. So what Holistipilan is telling you is that we want you to be more specific. How much of that is John and how much of that is Sally? For certain types of proposed scenarios, this might be super important. It's also saying that year to year, these numbers are subject to change. So we always want to go in and make sure that for the correct year that we're modeling for, this maybe isn't impacted by COLA or things like that, and making sure we need to make any income adjustments to these two numbers. So I'll show you in a second where we would go in and make those adjustments. You can click to view here and go ahead and adjust them before you hop into this scenario, but I like to do it from top to bottom when I'm doing the baseline for the client. So I'll go ahead and hit close. So first thing we're going to do is we're going to click on the tax year and change it to say tax year 2024, and we like to call it a baseline. Second thing, we're going to adjust our year. So this is going to account for the tax law that is published for that year. I always say that if it was for 2026, it would be accounting for the sunset. And thirdly, I walk through some 4 big points you want to hit on for a baseline scenario. For one, we always want to check the filing status. They're married filing jointly. Is that still true for your client? Even though this can be a hard conversation, it can be a necessary one, especially for the immense tax impact that this could have. So always want to make sure that is correct. Second, we need to adjust our wages. So if John and Sally were working last year, but they were retired this year, we would need to hit this edit button to adjust our wages for them. Luckily, they were retired last year, still are this year, so we're set on that end. Third are those overrides, right? So for John and Sally, in our income section, we have their IRA distributions and their gross Social Security. So like I said before, we can hop in here. This number is currently combined for John and Sally Smith. So what we want to do is we want to separate this out. So John and Sally make it pretty simple for me because they are a demo client. So we'll just split it right down the middle for them, $25,000 for each. And then we're going to hit close. You're going to notice here this number has not changed. What we've done is just added some specificity to this scenario 2 to help Holistipilan be able to better model out scenarios for the future. And now we're going to do it with our gross Social Security as well. So we'll come here into gross Social Security benefits. Now this will be impacted by COLA. So I've done the calculation on my own manually, and I know that it's going to increase by $2,000 for the next year. So now what I'll do is I'll clear that out, and I'll, again, split it right down the middle for John and Sally. So now when we hit close, we are going to see this adjustment, but that is based on COLA. Now, we might need to come through here and adjust gains and losses. For John and Sally, we're just going to take out this $1,000 of capital gains, and then we should be set to go for them. And this is how you create a baseline scenario. Now, depending on your client, there could be more adjustments to be made, but now you should be able to go through and start all of your proposed scenarios from here.